What's up, guys? It's Rob here, and we have a lot to cover in this video today. We're going to be talking about CEI Stock, BBIG Stock, SDC Stock, and CLOV Stock. So we've got a lot to cover. Let's get right into it. Let's take a look at CEI first. So with this stock, right, we have been on a crazy ride, especially if you look at the past 30 days. You can see that about 30 days ago, we were down at 45 cents. We've just been shooting up. We more than 10x to get to $4.85 at one point. And then we started subsiding, right? It wasn't a horrible reversal, right? We were actually maintaining our level at $3 until we crashed through it in a massive way on some horrific news from Carousel Capital, right? A short report that they wrote. I think most of you will remember that. We've covered that a lot in this channel, so we're not going to talk too much about that, but we are going to talk about what's happened afterwards, right? What has gone on with CEI since the big crash, and where could it be going in the future? Because a lot of people thought that this thing was going to be pumping up on this rebound that we were having until we recently got shot down. So what's been going on with it? Well, first of all, there are a couple of things affecting the stock price. One is this $1.40 to $1.80 range, right? That is actually a range that we kind of formed during the first couple of days after this crash, really the first couple of minutes also, right? When we were crashing down, let's find a good angle to look at this with, we ended up basically bottoming out at $1.40 when we initially crashed, and then bouncing up to $1.80, and that's when this range was initially formed. Now, there has been some support for it since, right? You've actually seen that $1.40 has acted as both support and resistance. Right here, it's acted as resistance. Here, it's acted as support. And $1.80 as well. You can see that $1.80 has acted as resistance over here. And then even just earlier last week, we were using it as support before we eventually crashed through it and have re-entered this $1.40 to $1.80 zone. Now, it's my expectation that we could trade around here for a bit, right? But this is a very volatile stock. If you actually look, it's number 2 ranking on StockTwits, right after Shiba Inu coin. It is the most talked about of these stocks that we have listed here. CEI is the green line right here. On Google, it's the most searched for. And on Ape Wisdom, it is not one of the top stocks on Reddit and Wall Street Bets, but it is, let's find it. CEI, it's the number 22 stock. So a lot of people on Reddit have kind of forsaken it, especially when compared to other stocks that we're going to be talking about today. But regardless, it is still ranking up there. It's number 22. That's not as low as it could be, but a lot of people on Reddit have kind of forgotten about this stock. So what's going on with it? Well, there have been, just before the huge crash actually, options just became available for this stock, and there are a ton of open interest call options for it, 50,000 to be exact, for the $2 strike price on October 15th, and that is this Friday. So that means that this Friday, October 15th, there are 50,000 open interest call options for $2. Now, that means that institutions, the ones that were selling these options, will likely want to hold this stock below $2 and keep those options out of the money. They don't want those to expire in the money and to actually have to, buy up shares and distribute them to people who have paid for those calls. Now, with CEI, if we actually look at this on Ortex, you can see that the short interest is relatively low. It's only at 14%. It could be higher, right? It was much higher in the past. But that doesn't necessarily mean that we're not going to see some kind of squeeze situation, right? Because a lot of shorts were probably adding to their positions when we saw this massive downward spike, right? A lot of shorts are probably getting in around here. And sure, a lot of them were likely covering when we were rebounding up past, when we bounced off of around $1. They were likely covering a lot of their positions right here. That's on this big day when we were crashing down. A lot of shorts probably decided to take their profits. It was down over 50% on the day at some point, and shorts were probably pretty happy with that, and they wanted to take a bit of a profit because 50% when shorting is half of the money that you can potentially make, right? I mean, maybe the stock could crash to zero, and then you can make 100% on your money, but 50% is a pretty good profit point to be getting at. So, especially considering that it's a short position, right? With a long position, 50% might not seem like much because a stock could 10x potentially and be up 1,000%, but 50% on a short position is great. So, shorts were definitely covering around here. We actually saw that on Ortex on the day of. That a lot of shorts ended up covering when this thing crashed, and you can kind of see that in the short interest change, how it's gone down since then, right? A lot of shorts covered not just on this day, but have been covering since, taking profits. And that's led to a slightly lower circumstance, a slightly lower likelihood of the circumstance where we might see a short squeeze. But there is definitely the potential for a gamma squeeze if you look at all these open interest call options. I mean, it has never seemed more likely, right? Because this stock just got call options listed for it right before this massive crash. So these call options have not really had much time to actually work their magic, right? When this stock was rising, it would have been very dangerous for all these institutions to have all of these call options sold because if the price started rising a lot like it had been just shooting up day after day. You can see here, if there were call options out on this stock, then a lot of institutions may have ended up getting gamma squeezed because they would have had to buy back shares to basically cover their negative call option positions, right? They're likely selling these call options, and sure, they're probably selling some put options as well. They don't want many of them to expire in the money, and you can kind of glean that $2 is a very popular price for call options and put options on CEI. In fact, there are actually more open interest put options at the $2 level. Or sorry, no, there's more call options, but it's about half as many put options as there are call options. So it's still a very popular strike price and strike date for CEI options. I think that we'll have to watch this one pretty closely. There's definitely going to be a lot of action, especially around the $2 level, as the bulls and the bears fight to see which of those call options are going to expire in the money. So there's more call options, and likely institutions will try to aid that side the most because they probably have the most money working against that kind of position, right? They've likely sold a lot of those call options. They don't want this thing to go above $2, but there could be the situation where some institutions are more put heavy and are expecting this thing to go above 2. So it could be interesting to see some kind of institution war. Now, that's what we're going to talk about with CEI. BBIG has been experiencing pain as well, right? But it's been over a much longer time frame. You can see BBIG has been dropping the past couple of weeks. And actually, we've just recently been bouncing off of the $5 level, right? Today, we're up about 7%. And this is somewhat worrying, right? Because if you actually look at the past, there has been a kind of predictable pattern of BBIG, right? We've moved down and down and down, and then we have a little spike up before continuing moving down and down and down. And then we have a little spike up again. This one's very minor, actually. But then we continue our downwards trend down and down and down until we see another spike up and just continue making new lows. We don't actually make new lows this time. We actually hit the same $5.70 level on this spike up, but then we continue to break through that, make new lows, spike up again, and we've just hit the $5 level again, and it looks like we're on another spike up. Now, there's no telling how high this could go, but it is a very worrying pattern to see us continually try to pump up and then just get smashed through the old support levels and move lower to new lows. It's very worrying to see with BBIG. I'm not loving that aspect of it. And if you actually look at the short interest, you can see that we're around, I think, 26% for BBIG. 26.3%. And you can actually see that we've just been moving up in a straight line, basically. Like a lot of people or institutions have been just shorting this thing, pushing us down. And the short interest, as you can see right here, as a percentage of the free float, this yellow line has just been going up and up. And we've just been getting shorted down and down and down. And every now and then, there's been a little squeeze, which has raised the price very temporarily, right? These little spike ups. But oftentimes, institutions then double down on their short positions and just increase them more and more, pushing us lower and lower. So it's very worrying to see that we are continuing to break support levels and make new lows. Now, it hasn't happened this most recent time, right? We are actually bouncing off $5 without having made a new low, right? Because last time we were bouncing off 5 that we spiked up. But we're really going to have to keep an eye on this one to see if we continue this pattern, right? Because potentially there is money to be made playing to the downside. I'm not suggesting anyone short it. I'm not touching this one. It's very volatile. Often, as you can see, oftentimes we just spike up massively. A lot of the time, if you're playing it to the long side, we are in this downwards trend over the past couple of weeks. So it's a very risky one, I think. If you already have money in it, good luck. It's going to be a rough ride, it looks like. I mean, potentially, there are a lot of catalysts, a lot of dividends and crypto dividends that people are talking about with this stock. I'm not too sure if those are really going to raise the stock price, right? I tend to think that when there are for sure catalysts that are going to raise the stock price, that tends to get priced in fairly quickly, right? If institutions knew that this stock was going to go up, and they definitely have analysts who could figure that out, then they'd probably put money in themselves instead of shorting it, right? They would want to be in this for the long haul if they thought that this stock was just going to shoot up off of some great dividend news. So it's a worrying stock for me, right? I'm not as bullish on it as I once was when before we started this downwards pattern where we just keep making new lows. I am somewhat worried about BBIG. Obviously, this isn't financial advice. I'm not telling you guys to do anything investment-wise. That's just my opinion on BBIG. That's just what I think. Your financial decisions are up to you. So with SDC, this is a very interesting one because I have seen a lot of comments on my other videos. People have been talking about this, calling it the son of all short squeezes, right? They're saying GME is the father, GameStop is the father, AMC is the mother, and they're saying SDC, Smile Direct Club, is the son. So it's very interesting to see this try to get branded as a stock similar to AMC and GME. I'm very curious to see what ends up happening with it if we continue shooting up as we have been. We were at $4.45 or $4.50, and we made it all the way to $8.20 just about before retracing a bit. But now we've been moving up over the past couple of days. We're going to have to see if that continues and if we can make new highs. And really, if we do, there is a long way that we have to go with this stock. If you look over the past year, we were at highs of $16 just about a couple of months ago. And, we do have quite a ways to go if we want to see those highs again. And honestly, it's not out of the question, right? The Smile Direct Club is a real company. They actually make decent product, and there are some fundamental reasons why this could be going up. It's not just a one-off like a lot of these other stocks like CEI and BBIG, which likely don't have too much of a fundamental reason to be holding them. A lot of the reason a lot of people are holding them is just the short squeeze. Some people believe in them fundamentally, but far fewer, I think, believe in them than do in Smile Direct Club or AMC or GME. Not that those are really great fundamental companies, but they do at least have some kind of business model that's somewhat profitable, at least it used to be before the pandemic, right? Now, with CLOV, a lot of people on the channel have been interested in this, and you can see a very interesting pattern developing. We are once again bouncing off of this $7 level, as we have many times in the past. It has acted as a supreme support level for this stock. We've bounced off here, here, and here as well before we actually made highs of $28.85. Now, a lot of people are hoping that this stock will continue trending upwards, that will continue off of this momentum. And we are actually, it's looking fairly good for us right now because we are currently holding above $8, which is another support level / could have been a resistance level for the stock if we didn't manage to break above it in such a nice way. You can see there was a little bit of resistance here and in the pre-market, but we have successfully broken above $8 and are holding above. It looks pretty good for this stock. I'm thinking that we could be on a nice upwards trend, maybe until we hit $10, because as always, right, over the past couple of months, we have seen massive resistance at $10. Again and again and again, we have just been bounced off of the $10 level, and that has been very, very, very detrimental to a lot of investors, right? A lot of people have been buying this stock as it breaks through $10 or gets very close to $10, expecting it to run, and then they just get killed as it gets pushed back down by shorts and institutions who don't want this thing to go up. However, we do there's always the chance that it will succeed one of these times, right? Eventually, I think, is a good company fundamentally and will likely break past $10 at some point, right? I think it's only a matter of time. This could be the run. If not this run, then maybe we'll get bounced back down to $8, bounce back up to 10 eventually, and break through then. We're just going to have to wait and see with this stock, right? This is a long-term stock, I think. I think a lot of people are holding this, expecting them to do well over the next couple of years. They aren't necessarily expecting massive gains tomorrow. I think that there is the opportunity, though, to make some big gains, especially if we start to get a little bit of a short squeeze, because if you look at CLOV on Ortex, there is a somewhat significant short interest on CLOV. I think it's 16%. That's what it was last I checked, too. And, it's remained fairly steady, right? It's remained fairly steady. We've bobbed up and down. We've been down to 11%, up to 25%. But for the most part, 16 is kind of an average of where we've been. Now, it's not the largest short percentage, right? But if you actually look at the days to cover on loan, it's much higher than a lot of the other stocks. And days to cover basically means how many days would it take if shorts wanted to cover their position based off of how much volume they would have to fill, right? And based off of what the average volume is for the stock. So taking the average volume, how many days worth of average volume would it take for all of the short shares to be covered? That's basically what the days to cover means. It's going to say 2 days is the days to cover, and that's a lot higher than a lot of other stocks, most likely because CLOV's average volume is much lower, right? We're looking at somewhat low daily volume. If you take a look at the 1 year chart, you can see that a lot of these days, 7 million, 10 million, 20 million. So not the lowest of any stock, right? It is still a very popular stock, but if you look at BBIG, which, before BBIG had this massive run-up, it was trading around 4 million, 8 million, 49 million on that day, 6 million, but it was also a much lower priced stock. So the actual amount of money exchanging hands was much lower than CLOV was. So with CLOV, we do have some upwards potential. I am eager to see what happens with it. I do hold CLOV shares, so I want this company to continue trending up, but I am willing to wait over the long term to see what happens with it. So that's what I have for you guys today on these stocks on CEI, BBIG, SDC, and CLOV. Thank you guys for watching. If you enjoyed the video, feel free to like the video, subscribe to the channel. Other than that, guys, have a great day. I'll see you in the next one. Bye.